Ladies and gentlemen, Trading Made Easy. It's the live show with Rob. It's Thursday. It's the 21st of August, 2025. Where did the year go? What happened to the year? It's just disappeared into the distance and gone. Crazy, isn't it? Yeah. Watching charts makes you overtrade. You've got to be careful of that, guys. You don't want to be watching charts that makes you overtrade. Look at this. The S&P 500 has now come down into this level, and it looks like it wants to bounce and go out, and it looks like it wants to take that money, and then it bounces back in again. Haha, where's it going? Shane. Hello, Shane. Welcome. Glad you've got an ad already. Good revenue for YouTube. How's it, David? Good to see you. Good to see you guys back. Henny, g'day. Welcome, man. Good to see you guys. Absolutely wonderful. Here we go. Let's get going. Yeah, this S&P 500 is doing some interesting things, don't you think? All the way down to here, taking this demand of money. I actually thought this morning that it might bounce and go all the way up, but it looks like it's coming back in. Looks like it might actually break through and go all the way down. Isn't that interesting? But yeah, here we are. Yeah, but the one thing I want to speak about today is watching charts. Watching charts really does make you overtrade. It's actually not good for the psyche, not good at all, but we all tend to do it, and everybody tends to do it. I'm just checking this trade because I've got it on the other platform as well. I just want to make sure that it's not going pear-shaped, but it looks okay. It looks fine. Looks like it'll still keep on climbing. Well, target's up there, though. Wow. Come on, dude. Do your thing. Do your thing. Brent crude oil. I'm still married to that. I actually called it as trade of the day today. Brent crude oil, and there's a long tail that's developed on there. Those things would stop doing. There's a long tail that's developed just above the candle there, and that is a bit concerning, but it has broken past the prior high, so it looks like it wants to go up. So yeah, the Brent crude oil trade, there we go, still on the go. Nothing's changed there. United States dollar, South African rand, still on that, and that one is starting to show signs that it wants to come back again as well, so it doesn't help much either, does it? Ethereum, the interesting one. Hi, Blue Mango. Look at Ethereum. It's, as I said this morning, it's gone into a bearish phase. It's sort of filtering downwards, and it's come down. It's broken through the first level of demand and money, and it's hit the second level demand and money, bounced around, gone back up, but it's hit that trend resistance, and it seems to have found serious resistance there. It didn't break through. So if it stays in that shape and it goes on to the downside, then you could be looking at this continuing on its bearish run. And if it continues on its bearish run and it breaks through that level, then we're heading all the way down, I think, to this red line at the bottom here. Interesting that, though, but it does look like it's sort of shaping to go down that way. You could even call a bit of a head and shoulders here on this, but I think Shane called it the other day. Noticed the head and shoulders, but imagine if that now comes down. That's actually a bigger head and shoulders than we had in the first place, and then it looks like it'll probably go all the way down to the bottom here. Let's just see what happens with that. It is interesting because Bitcoin is very close to its support. There is a support here for Bitcoin, a big support at this level of 110, and it seems to be finding its way all the way back down there, down to the support. So there's a good chance that these crypto trades are gonna kind of just find their way down. But that said, they're very volatile. They do their own thing, and they tend to go up and down. So you never really can be 100% sure. Let's see what we got. Charts are like a drug, and they actually, it's not good for you to get stuck on that, because it will eventually, it'll cause you to mess around with your trading. It really does make you overtrade, because you have a plan, you put a plan in place, and what happens with that plan is you're watching charts and you're halfway through, and then you start getting itchy fingers on the mouse finger, whatever, however you trade, and you end up taking trades that you didn't really want to take, or getting out of trades too early, or all these band-angled things. I mean, if you can actually position a trade, walk away from it and leave it behind, you're probably going to be better off in the long run. Hi, Hilda. Greetings, fellow traders. Hi Hilda and Rumfort. Oh, good. Rumfort here. I didn't see him. Where's he? Where's he? Must be here somewhere. Okay. Gold looks like it broke through that trend resistance and it's coming back to retest and it wants to go up again. There's that little green blob that wants to go up. Looks like that's coming back to retest and going. Why have I got the red line here? I don't know why I put it there because I'm looking at this. Looks more like it should be there. So what I'll do is I'll put it past down there actually. Give it a bit more room. If it breaks through that, then yeah, 3,300 looks more like it. Gold is above the trend resistance. Now support, retest. There's the green candle. Might actually go up from here. Keep an eye on it. Might actually be a long trade. Okay. Is everybody here? It is now 2 o'clock. It is now gone past 2 o'clock, actually. I like to start the shows just a couple of minutes early, get in there, get started, and then everybody can sort of pile in as they go. And then we can start talking about things. But the one main subject I really want to talk about today is overtrading, because you find yourselves overtrading quite a lot because traders get bored. Effectively, we've talked about this a million times, how traders get bored because there's nothing else to do. So you're sitting watching charts. And when you find yourself sitting watching the charts, this is where you end up dropping down the time frames, looking for faster trading, going into 5-minute time frames, looking for other systems that will help you to trade and look for trades and do all these silly things. Effectively, what it does is it makes you overtrade. It makes you start thinking about your trades or the trades that you've got in. Like for example, you're looking at this, you're waiting for it to bounce out, nothing's happening, so you start looking for lower time frames on that one. But let's say my Euro Great British Pound long trade that I know I've got, I'm sitting looking at this now. If I was sitting watching this trade all day, I might easily trade out of it because I'm in profit and I'm thinking, I don't want to lose the profit. I see that big red candle. It starts to make me sort of nervous within, and I start thinking about it and I start deciding to get out of the trade because there's a big red candle. Whereas what I should be doing is looking at these big lines here and what happens there. You see how long it takes to get up to the target. You've got to leave it alone. And that's the difficult part. How do you actually leave it alone? And the only way to do that is to move your stop loss up into cost when you can, and to move your stop loss up and trail it as much as you can when you feel that you want to get out of the trade. But if you're going to sit and watch the charts all day, you're going to make a lot of mistakes. And you're going to trade in and out of trades that you really didn't want to trade in and out of. You might even buy trades that you didn't want to buy in the first place. So that actually becomes an issue as well. The trouble is, on the longer time frames, it actually becomes even more of a hassle. And Shane's asking, did you say long in gold? What I'm looking at in gold, Shane, is gold is effectively bearish down here, but it's broken through structure. And it's broken through that structure, gone up, it's come back and retested that trend, and now it looks like it wants to turn around and go back up to the long side. And it also bounced off the main support down here. There is a on the 4 hour, there's a big one on the day much further down. But yeah, it looks like gold wants to go long. Now, if you want to play into that, if you want to think about that, gold is normally the safe haven trade. Not always these days. These days, people buy other things. But in the old days, it was if the indexes are crashing, you buy gold. Let me have some coffee. Coffee. These days, not so much the case, but gold is generally the go-to trade when things are going pear-shaped on everything else. And if I look at SPY, SPX 500, whatever you want to call it, the S&P 500, the US 500, the main US index here, then if I look at that, then I might say, do you know what? S&P is going down. Looks like it's going down. Looks like it's weakening. There's a little bit of, iffiness around what's happening in the US at the moment, what they're doing and what they're saying. Also, the Tech 100 took a big hit. The tech stocks, the AI stocks took a really big hit. So if you look at that, you've got to look at it in the sense that fundamentally, then you've got to think to yourself, well, there is a good chance that gold could go the other way. Doesn't always, but there's a good chance of it. So then you're looking at this and thinking there is a good chance that it might turn and go long. So it might be a long trade. Might actually be a long trade. Not necessarily, but it might be. Boom, boom, boom. Okay, 33.58 for Blue Mango. Uh, yeah, past the prior high, I guess. Yeah, okay, that sounds fair, Blue Mango. That does sound fair. If I open that up, Blue Mango says plus the 33.58. So you're looking at kind of letting it go past that prior high, giving you a clear run to the upside. What I'm looking at is it has broken that trend resistance and it has sort of retested, and it looks like it wants to head on up now. No guarantees here, but it might happen. It might actually just happen. So you can keep an eye on that one. Found trading on the 4 hour so hard. It's actually strange how the different time frames affect people. It's kind of weird because if you think about it, all of the all of the candles, all of the charts, all of the systems are the same. It's just running on a different time frame, and it should be the same. But what actually happens is your psyche is different on the different time frames, and that's why people find it so difficult trading on a different time frame, because you've got to get used to it. And that's what makes the difference. That's why Shane said he's finding the 4 hour so hard. And the difficult part for Shane might be the patience. They're sitting on your hands and just leaving it and just let it go. And the easiest way to trade the 4 hour, the day chart, even the weekly chart, is to position your trade, walk away, and don't look at the charts. Do not sit and watch charts. If you sit and watch the charts, what's going to happen is you're going to find yourself making mistakes, dropping down the time frames, trying to take trades when they're not there, trying to force trades that are not really valuable or valid or there for you to take. You have to be careful of that. Yeah. 33.58 is the prior high. If it breaks above that 33.58, and everybody does have their own terminology and their own way of looking at things in the market. And there's nothing wrong with that, because all you're doing is drawing a line in the sand, because as we've discussed about 4 million times, the charts can't predict the future. They can't make you money, and they just give you the high probability trade. So, if you want to draw a line in the sand and say, I think that level is the level I want to trade at, then that's your level in the sand. And that's how you're going to manage your trade. You're going to manage your trade from that point with your belief that it's going to go up or down. That's how you work with charts. Charts can't predict which way the market's going to go. They're historical. They're not futuristic. They can't tell you what's in the future. They can only tell you what happened in the past. The reason we use charts, like I've told you 100 times before, is so that you can read what the other human beings are doing. Easier to see on a chart than on these little numbers here. And in all probability, because humans are creatures of habit, they'll probably do the same thing again. And that's where the money will be. You'll find the money there because that's what they're doing. It's very difficult to trade on these little numbers on the right here, or even on depth of market. It's really difficult to trade on that, just on those numbers alone. Unless, of course, you're investing, in which case you're just investing in a price and that's it. But if you're looking for a trade, you really do need a chart, because the charts show you pictures of what people are doing when they're buying, when they're selling, and that makes a difference to your trade. So you look at gold, you can see that there must be a whole bunch of other traders or money that have seen the same as you, and they're buying it and it's going up. That's why we use the charts and the probabilities, because we've seen what people do, and then we follow what those people do, and that's what keeps us in the game. Shane says he heard on another channel that the Australian dollar, US dollar is going to crash. What are my thoughts? I love it. Is that a pin bar on the gold on the 4 hour? And okay, I love that. Now I have to go and have a look at that. No, there's no real pin bar. No, no, that's a solid green, and that's a bunch of sellers getting back in. That's an undecided more than anything else. No. Don't see a pin bar. Okay, right, now. Let's have a look at what did Shane say? The Aussie dollar US dollar is going to crash. The Aussie dollar US dollar is going to crash. I love that. Aussie dollar US dollar. Let's go and have a look at it, shall we? Aha. Too late. It's already crashed. No, look, the thing is, the best tip in the market is no tip at all, because there are no tips that are worth their salt at all in any way, shape, or form. There's your Aussie dollar, US dollar. And clearly, the Aussie dollar, US dollar is trading in a range, a giant range, but a range. And it's going up and down. And it's staying between that 64 and that 66, maybe the 63.8 and the 66.4. But I just look at that, and all I see is it's not going anywhere. Why would the Australian dollar, US dollar crash? Maybe if someone's predicting the US dollar is going to go pear-shaped, I don't know. But no, I don't think it's going to crash in any way, shape, or form. What I see here is there's been a lot of pressure on it. So what we can do with the Australian dollar, US dollar, the best way to handle this is to do it technically and just put it on a day chart. Let's see what we've got on the day chart. Let's put it on a line chart and see what we have here. What have we actually got on the Australian dollar, US dollar? Is there anything here that's valid for us or worth looking at in any way, shape, or form? What I am seeing on the day chart is maybe a bit of a trend. There may be a bit of a trend through here, which is a bullish trend, by the way, more than anything else. Is there any trends? Ooh, give me that. Below it. I look at that. That looks like it's on the trend. We can draw another one on the top. Again, that looks like it's still in the trend. The only time it's going to crash is if it breaks through that. Yeah, let's have a look at sort of support levels, if there's any on this day chart. Is there anything worth writing home about? And there is a level there that it keeps coming down into. It likes that level, and there's a level higher up that it likes as well. There's the chart, kind of marked up, if that's what you like. So now, there's your Aussie dollar, US dollar on the day chart. Let's put it back on candles. Let's see what we got. Oh, look at that on the day chart. So if I look at this, it's in a bullish trend. There was a bit of an anomaly there, but it's in a bullish trend. It's within that trend. It's in that railway. It's moving to the upside. There has been some strong push down to the bottom here. It has hit this level here. The support, if it breaks through that support, bit tricky. And if it breaks through that support, bit tricky. So if it breaks through this level, then yes, you could have one of those terrible runs down to 59.5 again. But if it doesn't, if you get the green candle going up, then it's going to go back up and take some money further up here. But let's put it back on the 4 hour and see what we've got there. And on the 4 hour, it sort of goes back into our range. Slightly bullish in that range. In all likelihood, look how many times it's bounced off that support. There's support, there's support, there's support. Probably going to do the same thing again. Probably going to bounce out of that. Probably going to go up. So there's your Aussie dollar, US dollar. Hitting support, hitting support, hitting support. Ooh, going to go up again. Who can predict which way this is going to go? Nobody can predict the market. No one, unless they're insider traders or something. They're great for them, but I doubt that. There's your top level. So if you're in doubt and you get a hot tip like that, just do exactly what I just did now and picture it for yourself. Make your own decision, picture it for yourself and say, how does that look on any given day? And work it out from there. And then also be careful of the following when you get the tip. The following is, did the person say that off of a 5-minute chart Or did they say that off of a general market, for example, the day, the weekly, that sort of thing? When he says the Australian dollar, US dollar is going to go crash, is he saying it based on a small time frame, like it's just going to happen for the next 5 minutes? Or is he saying it like a general big thing, like Australia is going down the toilet or something to that effect? Sort of get some context around what they've said as well. Okay, Rob, my 4 hour trading view chart is different. I find that a lot, particularly with some of the funded market accounts and things like that, that the charts are slightly different sometimes. And it is weird. It is weird. I've actually found it on my MetaTrader as well with a cash account. Sometimes it's different to one of the funded accounts or whatever. And I've actually found like that C trader that we trade with, that also is sometimes different to some of the other ones or whatever the case, which is what makes trading 50-50 in the first place, because everybody's trading on a slightly different. It's the way the brokers pulled in their trades, and the way that brokers portraying them forward to you. So that can sometimes be off, but it shouldn't be off by that much. It should be still pretty close. Pretty close. Bob, how long does your chart have until the close of your current 4 hour bar? Let's just see. What are we talking about? The Australian dollar, US dollar? It's actually not showing me here. Normally it does. I must turn it on. I haven't got it on this chart, so I can't tell you. Normally I would have it. Normally it tells me. I'm not sure how long that one's going to take to close. Okay. Yeah. Yeah, channel up. It's channeling upwards. It's moving up. Yeah. Okay. It's a higher high. It's not a lower high. It's a higher high. Look, it's going up. There's the lower highs down there. That's going up, going upwards, going upwards, going upwards. Not going down. This is bullish. Let's see. Going along the upwards. Okay. Henny, nobody likes MetaTrader, but you know why I've got MetaTrader, Henny, is because my main cash account is with with GT and it's with MetaTrader, so I can't get out of it. It is what it is. But what I do is I have a look at the when I'm researching and whatnot. I'll research on other programs and whatnot, and all of these things will be pretty similar. So when I go back to Meta, I don't need a lot. I just need these trend lines. So Meta is fine. Where you find MetaTrader is difficult is if you want to work out the size of your trade. That's the difficult one, working out the size of your trade on MetaTrader, because you have to like download another program off MQL5 and the whole 9 yards. So that's the difficult one on MetaTrader. So what I do is I have a set amounts that I trade on my different sort of accounts and what have you. So I kind of know what I'm doing there. But you can still make calculations and what have you if you need to. It's not the end of the world. But yeah, it is quite annoying. I wish they would improve. They've fallen behind a lot. They used to be way ahead, and they've actually really fallen behind a lot. So I agree with you. And also, someone new who gets into MetaTrader 5 will find it kind of insanely confusing. It took me when I first started with MetaTrader 5, I think it took me a day and a half to 2 days just to figure out what everything was and what I needed and all the rest of it. So, for I can imagine a person who's just started out trying to deal with that. It's insane. So yeah. Okay. Hi Nayan, good to see you. Okay, so Shane, you're working out your size in MT5. Okay, that's great. That's good. One thing I've noticed here on this Aussie dollar, US dollar, is that big head and shoulders there. Aha. I wasn't looking at the moment when I was marking up the chart. I didn't actually spot it, but now I'm spotting it. Do you see it there? Let me draw a line in so you can actually see it. Okay. So guys, you've got to look for these things, right? So that red line is just marking up the head and shoulders, but there's a shoulder, there's the head, there's a shoulder, and down she goes. Now look at this. Well, how does the head and shoulders play out? The head will depict the length of the move after the shoulder, okay? So that's the length of the move. If you measure that, it'll be the same as down to where it is right now. So that head and shoulders has played out to the T. In other words, it broke the shoulder, it went down, and it went down the exact length of that head, and it's played out, and there it is. And guess what? It's on the support. So what happens on the support? Back up again. Off we go. I wouldn't go short on this, that's for sure. Not at all. I'd actually rather take a long trade on the Aussie dollar, US dollar right now than a short trade because of that. Just because of that alone. It's broken that head and shoulders to the downside. It's hit the support. And it's going to go up. Watch out for these patterns, guys. Keep an eye out for them. They're quite important. If you see them, you don't often see them straight away. But when you do see them, it sort of jumps out at you like that one jumped out at me now while I was talking to you guys about something else. And I looked and there it is. And because the Australian dollar, United States dollar is obviously not something I'm trading at the moment. And maybe I would be. But now that I look at this, I'm thinking, well, that's actually, it's failed there, it's failed there. Probably going to be a long trade. Let's see if we get a nice green candle coming out of here. Now, how would I trade this now? How would I trade this to say to me, Rob, this looks like a good trade, but should I buy it now? Well, if I'm not 100% on this, because there's a good possibility it could still break down, break off and go down, and somebody said the Australian dollar would collapse, so that could be tricky. So what I will do is then say, okay, just to be on the safe side, I can take a trend line, and this is a very short-term trend line. You could do this on the RSI as well if you use the RSI, okay? Draw it down here and say, well, let me put that trend line in. And my opinion is, if it goes up and breaks through that, then it's broken the structure, it's going the other way, and I can buy it long. So I'd have to wait for it, I'd have to be patient, but it'll be a good buy if it just breaks through that line and goes to the upside. Now, if you're not great with this, and if you are an RSI user, you could do it this way as well. Now I'm going to show you a little trick that I've used in the past, and I think I've showed you guys this before, but for those of you who haven't seen it before, okay, so there's your RSI index. You see your top level is at the 70. Your bottom level is at the 30. Now you think to yourself, it's way, if it's below this 30, it's oversold. If it's above that 70, it's overbought. Now there are pro traders out there that only use the RSI, nothing else, only the RSI. And they won't even use lines, nothing. They look at it, it's overbought, we sell, it's oversold, we buy. So now this is extremely oversold, so you want to be in a buy. You want to buy this because it's oversold, because that's what the pros are going to do. But when do I buy this? So similar to that line there, you can take a line and you can simply draw it across here or through there. Or if you prefer, you can take it from a slightly different level and you can say, I don't like that. I'm not getting a good picture of that. Let me draw it down there. See what I get. Now you can watch your RSI, and if your RSI breaks through that yellow line, then it's going the other way. It's going up again and it's going long, and the structure's moving the other way. So that's how you can use an RSI if you want to use an RSI on your charts. I'm not saying you must use an RSI on your charts. You know that I don't even bother with things like that. That's just for information. If you're one of those guys that uses something like that, or one of those ladies that uses something like that, then that's how you should use it. You can use MACDs, you can use stochastics, but for that particular purpose, the RSI is your best tool. And as I say, the one tool that you'll find on a pros chart where he's sitting there and he's got nothing else on there, nothing else, not even a line, but he's got an RSI at the bottom. He's simply trading with RSI, nothing else. That's crazy if you think about it, but a lot of guys will do that. So for example, what a pro would be doing now is they would be buying the Australian dollar, US dollar, not selling it. And they'll be telling Shane that you should sell it. Because if they tell Shane to sell it, then they can make some money off him when they buy it. That's how it works. Sorry, Shane, I had to use you as an example because you did say it's going down. Okay. I learned something. Thanks. Oh, my ad at 8. Yeah, no, totally. I actually haven't looked at calculating it on MT5 lately, Shane. I used to try and it didn't work. Maybe it's changed now. I just check trades as to the size of my contracts and things like that. So I must actually have another look at it again. I don't use volume OBV anymore, but because it just gets in the way, all right? It just gets in the way. And really, the only thing you can do with volume is, for example, if I put a volume on here now, all it's going to tell me is if it's a good move or it's a worthless move. That's how volume works. I mean, you can't really take a trade on volume. Volume will give you the insight into the price is moving fast. It's moving. It's giving you a long candle, and there's really little volume. Then it's not a good move, is it? It's not a good. That price movement is just like a knee-jerk reaction or something like that. But if you get like a good move and you get a lot of volume, then you know it's a good move and it's worth taking that trade. So that's kind of what you use volume for in the markets, and not really much else. So I don't bother really putting it in there unless I really want to check if the volume is genuine, or if the move is genuine. If I'm looking at a move and I'm wondering if I'm unsure for whatever reason, and I think, is that a genuine move? Could that be possible? Then I can put a volume on and just have a look and see if the volume is confirming for me. But no, I don't use volume in general anymore for anything, because I found that very seldom do you need the volume to take your trade. And what you find yourself doing is putting far too many indicators on your chart. You find yourself putting the RSI, the MACD, the stochastic, the volume, the overbought, the ATR, and then there's just this mishmash of lines all over your chart. This mishmash of stuff. The chart's this small and everything else is all around it. And then you can't really depict where you are, where's the best place to trade. You start trading against yourself because, as you know, the market's 50-50. Everyone's got a different point of view. Do you know why everyone's got a different point of view? Because his system is telling you that you must buy and your system's telling you must sell. That's as simple as it gets. Now, you come along and you put all these indicators on that you've learned from all these different people. Okay, so because every time you learn a new system, you don't take away the old one, so you just add another one, and you just add another one, and you just add another one, and you add another indicator. Eventually, it's just all these lines. And then you look at one thing and you say, I should buy that. And then the other thing's telling you, no, you shouldn't. You should actually sell that. So that's why, for example, if I want to look at an indicator, like in this case, I looked at the RSI now. It's like the one thing I might look at, unless I'm really concerned about volume, and then I might look at the volume and say, well, what's happening with the volume? But I don't really need to here, because the RSI has already told me that this particular product is insanely oversold, and in all likelihood, it's probably going to go long. And it's also told me it's hit support really hard, and also it could break to the upside through that trend. Good enough for me. I can see where the trade lies here. In fact, I could take a long trade on it right now if we wanted to. There's nothing wrong with actually taking a long trade on the Australian dollar, US dollar right now, even though somebody's told us that we shouldn't. Because that technically is a good trade. So what we could do is take a long trade, put a stop loss at 63.8, and put a take profit up here at 65.6, and we're probably going to make quite a large sum of money. I think volume will potentially show false breakout, etc. RSI is good in a ranging market. So, you know, if you look at this is a ranging market. This is a full-on ranging market, don't you think? This is insanely ranging here. And in fact, I think we should actually buy this right now and risk it. It's a 50-50 game. So why don't we put it on this? Okay. Why don't we say we put a stop loss at 63.8? What do you guys agree? 63.8. What do you think? Let's see how this trade works out, guys. It might go against us. I don't know. We all know that it could go against us. And we put a take profit at, let's say, 65.6, because that's achievable. I think that's pretty achievable. That's a pretty good risk to reward ratio. Obviously, we're going to need a few more lots than that. Probably half, yeah, 241 US dollar loss for a 660 profit. I'd say that's pretty fair. Let's buy it. Let's put it in the market. Let's add it on and let's see what happens. I mean, what the heck? Everybody told us it's going to crash and go short, so that tells me we should buy it because they're trying to get me to sell it. There you go. So, yeah, Shane, there's your trade. Totally against what you said, but anyway, there we go. Okay. OMG, Shane says OMG. You don't need to. I could sit here, Shane, and I could take all of these trades, every single one of them on here, if I wanted to, and just manage them. It doesn't matter. It's not even a worry. That's the point of the strategy. The charts can't predict anything. They can't tell you anything. All the charts can do is give you a high probability. So all you've done there is taken a trade on a 50-50 basis with a point of it should go up. I feel like it's going to go up, so I'm going to buy it. And that's it. End of story. That's why I bought it. And I'm doing the opposite to what somebody said. And, yes, you should wait for it to break through there. In fact, on the RSI, you should wait for it to break through there. That's the perfect scenario. But that's how I roll. It looks good to me. It looks like a great trade. Let me get in and take the trade. It's fine. Let's see how we go. I'm more worried about my strategy than the lines. The lines, yeah, if I'm really scared of it or really worried about it, and it's a big thing, then I'll concern myself with that. But as it stands, that sort of thing, no worries. Euro, Great British Pound, this one. Well, I'm not going to take it on this account. Actually, US dollar, Australian dollar, US dollar, I should actually take on my other account while I'm here, to be honest. But okay, it's fine. It should be fine. I'll look at it a bit later. I can't open that up now. Yeah, I actually want to take that trade on that account. Probably going to be a good trade. It'll probably work out beautifully here. Okay, I need to get to that. Shane's going to do the opposite. Okay, let's see what happens. Let's see what happens with that. And we'll take it from there. Shane, I hope you don't lose doing the opposite. Okay, I really do. I hope you don't lose doing the opposite because that's the last thing you need. I'm just gonna actually, for real, I'm gonna just go to my main account. You guys can't see this, unfortunately, but because I'd have to sort out the whole thing here. But this account's doing quite well. This is my $100,000 account. I love that. Right, so let me know if you guys can see this. Otherwise, you'll get my account number and take all my money. Oh, I love it. Let me just find advanced. There we go. Okay, so what did we say the stop loss was? 63.8, eh? This is on time frame. Let's put it there. See what I got. Yeah, looks good. 63.8 is actually a low there. Okay, let me put that in on this one. 0.63. Okay. Oh man. .63. One. What did we say the take profit was? 0. Yeah, let's put it 0. Perfect. Good. Contracts. How does that look? Yeah, looks great. It's like a fine old trade. Perfect. And there we go. Okay, sorry about that, guys. I just had to do that. I'm actually trading that trade on a live. There we go. Perfect. Hope you guys are still here. Haven't run away. Nayan went long. There we go. Thanks. Yeah, good know. Did you actually go long there, Shane? I thought you said you're going to go short. You went long. I actually went long on my bigger account now. So, yeah, I'm quite confident in that. I'm not waiting for it. Sometimes the feeling is all you need, and sometimes it goes pear-shaped. And that's okay. I've got lots of trades open there, so that's fine. Looks like the S&P wants to fall through that level. Now, if the S&P falls through that level, we're talking about some serious stuff here. So I'll tell you what, I haven't marked up the S&P 500 on the day chart for a while, so let's just go and have a quick look here and see what we've got before we get into serious trouble with it. Let's just see what we've got. Let's just have a look. Okay, so it's definitely, you see, you've got to watch out for this because I haven't looked at it for a while. And that on the, look at that on the day chart, it's broken through there quite seriously. So that even that is gone. You can remove that as well. And yeah, let's just have a look at that. That looks like a cool railway line going up there in a channel. Sometimes they're a little bit iffy. Split up a bit. Okay, good. It's a nice little channel there. That looks good. There's a level here that looks really interesting. Of course, I just wanted to have a look at the S&P 500 on a bigger scale on the day chart. Just see what we've got here. And look at this on the day chart. It's literally breaking structure on the day chart, which is quite serious, guys. That's quite serious because that's the day chart. So that tells me that the S&P 500 could come down quite heavily. I'm just going to take this one out because we're not using that one anymore. And I'm just going to put a new level in here because I think the level is here. Level looks quite prevalent over here. So let's put that level in there. I think that's quite good. That one I'll just leave as it is. That's pretty much, let's put that up there and just leave a straight line on it. That's fine. That gives us the levels for the S&P 500. I'm getting quite interested in this now. Now let's see what we've got here. On the day chart, she's come up, broken up, she's come down, tested, gone back up, hit resistance, coming down, breaking the main level. Take it back to the 4 hour. 4 hours is going to look a bit strange, but there you go. Okay. But on the 4 hour, that's what we got. Wow. Interesting. So definite break to the downside here. It looks like the S&P 500 is about to give us a little bit of a hard time. I wouldn't say end of the world stuff. I'd say probably down to this main level at 62.50. Something's going to go wrong, it looks like. So there we go. Here we go. Heading down, going down. Yeah, getting in the lift. Third floor, ladies' underwear. Yeah, fourth floor, men's undies. Here we go. Yep. Yeah, she's going to break through there and head down. Looks like it. There we go. Okay. Yeah, Bruman's kind of gone off and maybe he's on a tour somewhere, having a good time, enjoying himself, having a beer. Because Bruman does go and have a beer. Maybe he'll be back. Who knows? You know, people come and go on these streams, and I love it when the guys are here, but they don't stick around forever sometimes. I mean, for example, where's Kevin? You know, he's also not around lately. Maybe they find another guy like me out there, or someone different, or someone more interesting, and they start watching them. I don't know. It's just depends. It depends on the person and how they feel. It's one of those things, yeah. How it goes. Okay. The world is busy changing according to my little levels there. So that is coming down a bit. Okay, let's just see what's happening on this one. That one's busy coming down a bit as well. Just wondering why my positions are a little bit of a headache. And it looks like the Aussie dollar, US dollar has already knocked us 25 bucks. Okay, that's fine. So be it. There you go. That's the trade we just took, by the way. Australian dollar, US dollar, this trade that we just jumped into now, has already decided, do you know what? Well, I'll just give you a little bit of a scare. We'll knock it down. How often do you guys take a trade and it just goes in your favor? It just works out for you? Probably very few. Most of the time when you take a trade, it always goes against you for a while and then it comes right. It's just how it is in the market. Always been like that. Never changed. I've never seen it different. 80% of the time when you take a trade, it normally just works against you a little bit and then it goes. The reason for that is because normally when you take the trade, you take it on the edge like that, okay? You take it on the level where it might turn, might not turn, because you're at that level where you're trying to make the most money out of the market. Sometimes it just goes a little bit further and that's what goes against you. And then you see a little bit of red and then you get panicked and you get out of the trade, and that's why you shouldn't be watching charts all day, because that's when it destroys your trading. You've got to accept that you're going to be in drawdown quite often, that you're going to have these drawdowns, that you're going to be in the red for a while in many cases. Because when you take the trade, you're normally taking it on the edge. And there's a very good chance that it's going to run you into the red a little bit, because you took the trade on that edge. 80% of your trade should be like that. You know, there was a time in my career where I sat back all those 30 years and whatnot, especially in the beginning. I used to sit there and think, why does every trade go against me? And, you start getting psychologically messed up in your head. But when you get around it and you understand that 80% of the time the trade should go against you when you take it, because that means you've done the right thing. You've probably taken it at the right level. It's going to swing around and then it will go into profit eventually. So just relax, just wait, just be patient, don't panic. If SPY goes down, how does that affect the Aussie dollar, US dollar? It's more to do with the dollar than the actual SPY itself. So the SPY is being affected by whatever, okay? And the S&P 500 will go down or go up based on, it could be anything. It could be the economy, it could be a war, it could be anything, right? And that Aussie dollar, US dollar base is based on what happens with the US dollar. Does the US dollar get stronger, weaker, whatever the case? And that's how it affects the Australian dollar, US dollar. It won't affect Australian dollar. It affects the US dollar. So it just depends which way the dollar is going to go. And it doesn't necessarily mean that because the S&P 500 is going down that the dollar is going to get stronger or weaker. It just depends what the cause and effect is of the S&P 500 going down. So you can't always relate the S&P 500 to exactly what's going to happen with the dollar. But in all likelihood, if the S&P 500 does continue to go down, this could possibly turn around and go the other way. So I wouldn't be too concerned about that. Just depends on what the effect is at the end of the day. Andrew, good evening. Good morning, Baltimore City, Maryland. How's it, Rick? Welcome. Good to see you. Nice to have you on board, man. The Aussie dollar, US dollar has bounced off the 200 on the daily. See that 200, also an important level as well. Very important level. You got to watch out for those levels. It's insanely important. Keep an eye on them because they do tend to affect things in a rather interesting way. But I only use a moving average on my investments. Very much 200 and a 50, and that's it. That's all I use. Just to see what's going on the investment front on those shares and that type of thing. See how the market moves. We took that Australian dollar, United States dollar trade. It's moved against us slightly. No big deal. Just slightly. It's still in play. It's still in a good place. But we started this show and there was a bit of green at the top here. Now it's running in the red. You see, it's drawdown. You're going to sit with that. You've got to accept that. You've got to accept that you're not always going to be in profit on every single trade. What you're doing is you're positioning the trade and you're waiting for that profit to play out at some stage or another. And that's why I say you do not want to be sitting here watching charts all day. Because if you sit here watching charts all day, you're going to be getting in and out of trades for no reason at all. You're going to be trading in and trading out, and there's just no point to it. You're wasting your time, and you're not making any money out of it. And the big problem is, for example, now, you take this Australian dollar, United States, I'm harping on this one trade, but it's okay. You sort of take this trade, and you think, the best plans of mice and men and so on. You take this trade and you say, well, I'm risking 250. I'm going to target a $650 profit here. Then you sit looking at the chart. And you either take a $26.50 loss or you take a $50 profit and you get out and okay, I'm out of here. And that's the last thing you want to do. What you want to do is walk away. Walk away because your plan, you've made a plan, and that plan is this. This is your strategy. Your strategy is to risk that money and to make that profit. That's your plan. Yes, you can change the plan slightly along the way if you need to, and this is going into a profit and you move your stop loss up and the trade becomes free, the whole story. But you have a plan. So don't be sitting here looking at the chart and thinking, ooh, I'm going to change the plan now because I don't want to lose. And you start taking small, tiny little profits. So what you end up doing is taking a whole bunch of little profits instead of making that big one that you want to. So don't sit and study charts all day. Let them go. Let them run. Like I say, if you haven't got anything else to do besides trading, play games or something. Do something. Just keep your mind occupied. Don't get yourself caught up in the mess. And the other problem you'll find with sitting watching charts, you're sitting watching charts and everything's peaceful. Everything's nice. You can hear the birds in the distance. Tweet, 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 tweet. Everything's nice. Everything's lekker. You can take a sip of your coffee. Ooh. Life is good. Life is good. And then suddenly, Donald Trump stands up and he says something. And the market starts going mad. It starts going up. It starts going down. And then it's moving this way and it's moving that way. And you're thinking, what now? And you might be sitting playing a game or something or doing something, but you're looking at the chart on the side here, you're looking at the screens and you're thinking, oh, look at that. So what do you think that's going to do to your psyche while you're watching charts? You're going to see these lines, you're going to see this, your share, your price, your investment, your trade going against you. It's like coming down at a hell of a speed and you're thinking, what am I going to do? The first thing you do is you grab this and you go and click and you go and get out of the trade because you're sitting watching the chart. Whereas had you been out, away, not looking, whatever the case, you wouldn't even know that happened. You'd actually come back and say, phew, it missed my stop loss. There's a big spike, and it's back where it was. Everything's calm. And you look at it and think, well, thank heavens it didn't take out my stop loss. It missed it. It's much better if you can position it, walk away, and leave it. That said, if you're trading on 5-minute charts, that's a different ballgame altogether. There you have to watch the charts because you're trading, you're scalping, you're basically trying to take a quick profit. So that's a completely different game. So just keep that in mind. David Paul suggested taking your entry where others put their stop loss. Any thoughts on that, Rob? He's not the only one who suggested that. In fact, many years ago, there was an old man that told me that as well. And he said to me, Rob, where are you going to put your stop loss? And I said, oh, I want to put it there. And he said to me, no, Rob, that's where you're going to take your trade from. But what it actually taught me, Shane, what it taught me was, you see, if you listen to people in the market that always tell you take a tight stop loss, take a fast stop loss, take this stop loss, and that's what that's kind of what he's referring to. What the situation is, okay, is most people, what they do is they go, I need to put a stop loss here. Let me put a tight stop loss here so it's really close by, or let me put a really fast stop loss here. That's not how you do it. What you do is you look at an area and say, I'm looking for an area where I know the trade's going to be invalid. And that's the area where I want to put my stop loss. In other words, if I look at that area, if the price is there, will I take a long trade from there? My answer right now is no. No, I wouldn't. I wouldn't want a long trade from that point. Not at all. No. That's where I want my stop loss. Because what most people do is they just put a stop loss according to the amount of money that they have or the amount of size of trade, or the way they choose their stop loss is very difficult for me to explain, but it's not like we choose our stop loss. It's like, I'll put a stop loss there because that's what I can afford. And then they put the stop loss there. Now, if I put my stop loss here, then that's kind of an area where David Paul's story of take your trade from where you want to put your stop loss stands in, because then I should actually wait for it to get down here and take the trade from here. That's what he's talking about. But if you're putting your stop loss all the way down here, out of the way, and it's an area where I wouldn't want to actually take a long trade from, then no, I would not actually use that scenario anymore. Yes, I was also told that as a young man, and they taught me at a very young age, like where you choose your stop loss, that's where you want to take your trade from. Unfortunately, if you take your stop losses like I've shown you here, it doesn't work. It's very difficult to reach that stop loss. In other words, percentage-wise, I mean, it'll probably only hit that stop loss half the time. So, yeah, no, it's entirely up to you if you want to do that. But like I say, it's an area where I wouldn't want to take the trade from anyway. So I'll look at that and think, no. So my thoughts on that is, yes, it's very true, but it's very true depending on the type of or the way that you choose your stop loss. Okay, so you've got to look at that as well. If you're choosing an area where that trade is dead, then it doesn't really apply in any way, shape, or form. Don't put a free ad blocker, because what it's going to do is it's going to stop you from your channel from watching. It's going to stop you from being able to watch. I did try that once before and it doesn't work. Okay. Oh, well, good luck. Enjoy. You can watch it later. Always good. Dum, 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 dum. I'm not sure how these things, Blue Mango, how they work, but I did try them before, and I ended up not even being able to get into the account. So just watch out. That's totally up to you. You can try these things out. There's all these different things and whatnot. And the other way, of course, is to pay for premium. That's an option, pay for premium YouTube. The trouble with premium YouTube is this, is I've got, for example, different accounts and on YouTube, and so now do I have to pay for premium on every single account? That's kind of weird. So you kind of gonna have to pay for premium on the account that you're gonna watch on. So you must choose which one you're gonna use as your main account and use that one for the premium or whatever. Yeah, that's it's complicated, but yeah, like I said, ads are one of those things in life these days. I understand the companies need to make money, and like I said, we've got this one in South Africa that we actually pay a subscription to, a premium subscription, and then they still feed me ads. That's crazy, absolutely crazy. So yeah, no, you're never going to get away from that. But while I used to get upset with it, I don't anymore. I'm used to it. I'm quite happy with it. Uh, I don't know if you know. One thing I did figure out in my days in life, and this is I'm going off track a little bit here, but like what Shane's talking about now with the ads and things like that is, sometimes it's worth going premium. Sometimes it's worth going the extra because, there were times when if something broke, I'd fix it with a cable tie, fix it with a bit of tape, whatever, tie a bit of wire around it. It's so worth it just to go and buy the new part or just go and get the new thing or just go and replace it. Don't try and tie it together. Don't try and glue it together. Don't try and fix it yourself. You know, how much is your time worth as well? You've got to ask yourself that question. For example, I want to repave the driveway. I'll do it myself because I know how. But how much is your time worth? It's going to take you a long time, a lot of work, and it's forever. And you get out there and you do it, and while you're doing that, you're trading, for example, and maybe you make a lot of money trading, and you're not making money there, or whatever the case, or maybe you have a business, or maybe you've got something else going on, and you've dedicated all your time to doing that, and you shouldn't be. Maybe you're fixing your car, or fixing this, or fixing that by yourself. And I find that sometimes it's worth investing that little bit extra, paying somebody else to do it. Let them do it. Let them do it. Pay them, and it costs you less than you can make money where you're supposed to, or do what you're supposed to in life and make that extra money. So, yeah, think about the balance in life as well. And, and it kind of applies to YouTube with a premium and sort of thing, or paying for things. There's a lot of stuff out there. For example, editing software for my videos, for example. I'd rather, there's so much free software out there. You get nothing from it. I pay for the software rather. I get a decent software and it's much easier to work with. And why not? It's worth it to me. It's actually better to do it that way rather than uh, trying to take shortcuts. So yeah, over the years, I kind of learned that sometimes it's just better to take the plunge and do the plungy thing. You know what I mean? Yeah. Sometimes it's just better that way. Not always, not always, not always, definitely not always, but sometimes. I mean, sometimes a shortcut is worth it. But if you've got the time to take the shortcut, that's great. There are many, many people who are retired or don't have a job or sitting at home or whatever, got the time to do it, then yeah, save the money, do it. But there's like a few things out there. For example, an old saying was like, for example, so if you employ an agent to sell your house, no, I'll do it myself. Well, would you represent yourself in court if you were accused of something really serious? I don't know. There's a lot of things that revolve around that type of scenario. Look where the S&P is going right now. Looks like it's falling. Looks like it's falling. You know, it's the same as like trading, for example. Now, you know how to trade. You've learned how to trade. You know how to trade your money. You know how to put your money in the markets and that sort of thing. And then you come along and you say, oh, let Joe, come here, Joe. Come and do this trading for me. I'll show you what to do and you do it for me. And that's a lot of responsibility to let someone else do it for you there. So trading, you're probably going to want to do yourself. I don't know. It's much of a muchness. Um, the egg in the radiator really works. Who doesn't know about the egg in the radiator? I'm pretty sure every man on earth knows about the egg in the radiator. I'm actually pretty sure every woman on earth knows about it as well. If your car's got a leak, throw an egg in the radiator. Yeah, love it. Love it. That's what I said to you earlier, Shane. The S&P 500 looks bearish. This is a daily channel that's running through here. Daily channel. And it's breaking through and it's going down. It looks like it's going to go. Looks like it's going to go down. That looks like it's breaking heavily to the downside, which means you probably find the NASDAQ or the Tech 100 is also, and seriously, okay, where's the NASDAQ? NAS 100. Let's see what it looks like. You look at that. There you go. There's your NASDAQ. Big break to the downside. Looks like it's falling hard. And it looks like it's got quite a way to go to get down to the bottom here. So NASDAQ is very bearish. That's your Tech 100. And yeah, so I would say that that is a story in itself. That is a story in itself. This S&P 500's got quite a way to go as well. It's quite a big run here. So that looks like it's gonna, it looks like it might go short. Looks like it might just go short here. What's the time? Has the S&P 500 just opened in the US or not? Because just be careful of its move and then back. Watch out for that. Watch out for that opening range breakout strategy. Yeah, that terrible one that doesn't work. There's a few guys showing that on the internet at the moment. Maybe I should do a video on that. Quite interesting. Okay, let's see what's happening here. Opening range breakout strategy. Wow, there's a lot of people talking about that at the moment. I don't know why. I don't know why everyone's so into it, but it's almost like any breakout strategy. Just why do you need an opening range breakout strategy? There's really no point to it. It's like drawing a line and saying, if it goes past that line, we'll buy it. That's pretty much it. And, you know, I had a look at it and it doesn't work. It's a big fail. Fails every time. Just about. Useless. Some people say it works, but I don't think so. Rumango, UK 100 and DAX are closely correlated. No, you're wrong. They don't. You'll see that I very seldom trade the FTSE because for me the FTSE is normally in a range. So here's your DAX. Okay, the DAX is in a range at the moment. Oh, bad luck for me. Okay. The DAX is normally going up and down or going in a trend. Okay. At the moment it's in a range. I get that. All right. But the FTSE's always in a range. Have I got it? Yeah, UK 100. Now this one's in a, it's climbing now. Okay, great. I haven't traded the FTSE for a while. But the FTSE was always just sitting around doing much. It wasn't really correlated with the DAX. The DAX would go one way and the FTSE would go the other way. It's actually quite interesting. But as you can see now, even though I said that, it's the other way around now. It's switched over. And the FTSE is bullish. It's going in an upward trend, clearly. And the DAX is clearly in a range. You do have this movement here, but you can see it's different. They will go in the same direction. Obviously, they'll go in the same direction because they're in Europe. But yeah, you won't get full correlation. It won't do exactly the same thing. It'll always be different. There'll be differences. I haven't traded the UK for a long time because it was pretty flat. It's always been flat. And now it's starting to, yeah, get quite positive. All right. Interesting that. Never thought I'd see it at 9,000. I haven't looked at it for a while. Okay. But as I said, the Germany and the FTSE. It'll go in the same direction generally, but they do react completely differently. They do react differently. They don't react the same. You'll find all the indexes, by the way, tend to follow each other. So if the S&P 500 is going down, then you'll probably find the DAX will end up going down, the FTSE will end up going down, everything will end up going the same way. They tend to copy each other to the T when it comes to that. But the shape of the chart will be slightly different in general. I just want to take it back. The S&P 500, give you a thing on that. I wouldn't even bother doing the opposite to the ORB. Lion, I like your thought process. I mean, great thought process since that doesn't work. But there is another thought process that I have for the opening range breakout, and that is, let's say that was the opening candle, and you're waiting for it to break above it, so you would buy, and then so what I would do is look at it as if I was looking at an opening range break. If it breaks the prior high, I won't buy. I'll wait for it to come down, because normally what it does is it goes up and then it sort of falls down the other way. And if it breaks down the prior low, then I'll go short or something like that. But I actually won't trade that system, because the system is very basic and very, how can I put this? Well, useless. It's a useless system. If I want to trade any prior high or whatever the case, I'll trade a prior high. I'll look at it and say, what's the prior high? What's the last high? If it breaks above that high, because it's going in that direction and it's broken trend and it's moving that way, then I'll look at getting into that trade. It might be a line in the sand for me. So for example, trading the prior low, I might do that here. I might take this, for example, and there's a prior low. So I'll look at that and say, that's the prior low. If it breaks below that, I'll go short. I might do that. Nothing wrong with doing that, but that's not opening range breakout. That's just looking at the prior low and saying, if it goes below that low, that's a pretty serious trade. Might be worth a look, and then take the short from there. If you want to sort of do some kind of confirmation, if you don't have a trend or something like that in your system that can help you to determine where to take the trade. So, that kind of thing is worth it. But the opening range will be, no, that you don't want to be bothering with. That you're wasting your time on. But here, I would definitely consider, for example, if I wasn't going to take the trade down here, and like I said to Shane now, just be careful, because you get this open and then it sort of slides back, right? And that's why the RB doesn't work as well, because you get this open and then it slides back. It always does that. Now, so overall, on a picture like this, I might say, yeah, I like this. It's breaking through there. But just to give it a bit more sort of value, I'll wait for it to break through that level and give me a clear signal that it's broken down, and then take the short down there. But it has already broken through the trend support. It has already started to break through this level of money. The money is trying to hold it up, but it looks like it's breaking through, and it looks like it's going to collapse any minute now. Now Shane's gone short on the DAX as well. You see now, Shane, what you've done is you've now gone short on the S&P and the DAX. Now, who asked me? Blue Mango, the UK 100 and the DAX are closely correlated. At the moment, the DAX and the S&P 500 are closely correlated. So you've kind of got one trade. Okay, so watch out for that as well. You're sitting with, basically, you could have just taken all the money and put it on one trade. The DAX is probably not going to do something different to the S&P 500 today. Probably going to go the same way, which is good if they both go down, because you're going to make double money. But if they both go the other way, then that's not going to be so good, is it? So be careful of that if you're managing your risk. Correlation is a big thing, and that's why Blue Mango asked me that. Correlation is a big thing. And the FTSE and the DAX will also correlate the same way. just the chart will look different. But what I've noticed with the S&P 500 and the DAX recently, the charts are moving very close to each other in the same shape. So just bear that in mind. It does look like they're correlating very closely, the S&P 500 and the DAX at the moment. Boom, 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 boom. What is the difference between something like S&P 500 and who? Who? I don't know who. S&P 500 is basically S&P 500, US 500, SPX, SPY. There's a bunch of names for it. It's just different products that are put together based on the US 500, or the 500 shares that are put together for that index. There's no point in buying one over the other, that's for sure. But even on the index line, on the indexes themselves, most cases, for example, when you sit with a situation where the US 500 and, for example, now the DAX, or the US 30, US 40, Germany 30, Germany 40, there's a bunch of names for this as well. It's just different products that are put together to trade. That chart looks very similar to the S&P 500 chart. Look, there's the DAX and there's the S&P 500. That chart looks almost the same at the moment. So you wouldn't want to be trading both of those together because they're so correlated. But the UK 100, for example, that chart looks slightly different. It always does. It always looks slightly different, but it does tend to move in the same direction. But what you've got here at the moment is the DAX, which has kind of moved down, and it's giving you an undecided candle, and the UK 100, which is going positive. Okay. And a way to look at this as well, for example, now how the correlation between DAX and FTSE, for example, Euro, Great British Pound, Euro, Great British Pound, you can clearly see there's a lot of disparity between the Euro and the Great British Pound. So that's like the DAX and the FTSE, okay, or the UK 100, whatever you want to call it. Also, a bunch of different names because it's a product that's made up together. Now, the Euro, Great British Pound trades very nicely against each other, and they go up and down. So, for example, we took the short all the way down. Now we're taking the long all the way up. But that just tells you that Europe and Great British Pound have differences in their economy. And if there's differences in the economy like that, then you won't get that straight line. You'll get that difference in correlation. So there is a difference between Euro and Great British Pound. There is a difference between German DAX and FTSE. Now, the German DAX is very much a picture of Europe, and the British FTSE is kind of just for the UK, and they have separated and they have pulled apart, and you do get differences in the economy there. I can't tell you why at the moment the S&P 500 and the German DAX are so correlated, but they sure are very correlated. Okay. Oh, VO, okay, is the Vanguard ETF of S&P 500. Okay. Great stuff. Then it's the same thing, right? Thanks, Nick. Thank you. I don't trade with Vanguard, so I don't know. But yeah, if it's the same thing, it's the same thing, man. There's no point in trading both, unless, of course, you want to trade it on different accounts. So if you've got a Vanguard account, you've got a Black Bull account, you've got a GT account, you've got this account, you've got that account, and then you want to trade it all, the S&P 500 on all of them, then you might want to do that. But otherwise, there's really not much point to it. Maybe you want to, if you've got different accounts, say, well, I'm going to trade on this account, I'm going to trade the US 500. On that account, I'm going to trade the DAX. And on that account, I'm going to trade the FTSE or something. Then you can do that. That's up to you. But yeah, no, if it's the same one. Yeah, it's just that there are many. I can't remember what the one I'm in on My investment account is called, it's also not the same. I can't remember what it's called now. Huh, totally different name. Yes, a dollar cost averaging investment. Okay. Yeah. Never used it. You see, learn something every day. I've been doing this for 33 years and I've never seen that one. But then, like I said, I don't trade with Vanguard, so I don't know. Interesting, though. Interesting. What is that thing called? SafeX or something? I can't remember. There's an ETF that I have, which is 1-to-1 on the money for the US 500, which I hold forever and I don't let it go. It's like owning a share. Those ETFs are quite good. You know, it's 1-to-1. It's not leveraged and that sort of thing. Those are good. These futures and CFDs and things like that, that's a different ballgame altogether because it's leveraged trading. Leveraged trading, you have to keep an eye on your risk and what you're doing and what have you. With investments, that's a totally different ballgame, as you know. Absolutely. Because I mean, leverage trading, if you risk 10% per trade, 10 trades and your whole account's gone, you know. Whereas if you're trading ETFs or shares or investing, 10% on one account is fine. Yeah. Euro, Great British Pound. So let's see what this is doing. Yeah, it's going the right way. I'm happy with that. See, this is the problem. If you're sitting watching charts, if you're sitting around watching charts, and then you see that big red candle and you sort of decide to get out because you see that big red candle and then it goes green again like that. It's very disappointing. That's actually more painful than taking the loss. You've got to let these things play out. You've got to let them go up and down all the way up and try and make you the money because that's what your plan was in the first place. And that's why it becomes so difficult to trade on 4-hour charts, daily charts, weekly charts, things like that. Because with the daily and weekly charts, is you do tend to see a lot of this. You do tend to see a lot of these ups and downs, ups and downs, ups and downs, ups and downs. You never see that straight line. Whereas if you're trading on 5-minute charts, 1-minute charts, you tend to get lots of this one-way movement. So it does become very difficult to trade on these higher time frames when you're watching charts and watching these things happen. The best way to trade these higher time frames, like I say, is to take them, leave them in the background and let them play out as much as possible. Just come back and check on them from time to time, move your stop losses around as you need to, and try and take as much profit as you possibly can. Yeah, Shane, you took a trade, but okay, obviously what I'm seeing at the moment right now is the DAX is trying to go up and the S&P 500 is trying to go down. So that might be what's turning it against you at the moment. But in general, they seem to be following each other pretty closely because if I look at the DAX, yeah, I see that little undecided green candle, which is probably hurting you right now in the short term, in the small term. And it's trying to take this money out of this demand level to go up. There's a big demand level that it's sitting in. There's a lot of money lying here. That's probably orders that it's taking and it's trying to go up. And that's probably what's hurting your trade. But, you know, if you look at the US 500, that is clearly breaking through that level or trying to break through that level. There is a bit of a tail there, so watch out for that. But it does seem to be trying to break through that level. It's the same level as the DAX has developed. What I'm saying is the DAX has developed a very similar trait, a very similar pattern as to the S&P 500. It looks almost the same. If you look at it, there's the demand level, same place, there's the up, and it's just running along the same sort of lines. If you look left and right, it's almost the same. There's not a hell of a lot of difference between the two. Now at the moment, yeah, this one's breaking down a bit more than the other one, that's all. But further than that, they really do seem to be at the moment, just at the moment, seem to be following each other lately. That's not normally the case. They do follow up or down, but they don't normally follow such a close pattern as they are now. So Germany and US, they just seem to be aligned at the moment. That's weird, very weird. But yeah, that's how it goes. And you know that it's still two different things. One is Germany and one is the US. So all the two different things. Yeah, lots of David. That's why I say, a lot of people get caught out by getting out too early. And as I've said to you, what I try and tell you guys on my videos and shows and whatnot is I'm not trying to show you, like this is how you make the money or whatever. I'm actually trying to show you guys a lot about the mistakes that I've made in the past so that you don't have to make them. You will still make them. You'll still make the same mistakes. There was a lot of old guys that tried to tell me these things and I still made the mistakes. But yeah, it's just I did it so many times in the past where I'd sit and watch charts and I'd get out my trades too early. And until today, I'll still do it sometimes. And it's just psychology. There's nothing you can do about it. Sometimes you just feel like, oh, I need to get out of that, and then you off you go. It's not as bad as it used to be when I was younger. I would do it so often. It's insane. And I'm sure lots of guys do it. Like I say, I try and show you guys where I've made the mistakes, and then you guys can maybe get around that. Is the 4 hour the optimum time frame for trading? Have you looked at other time frames like the 2 hour, 1 hour for trading purposes? Rob, Diane, I have traded on every time frame known to mankind, I think. I've traded on 1 second charts, tick charts. I've tried trading tick. I've traded on 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hour, day charts, weekly charts, monthly charts. Only thing I haven't traded is yearly. It doesn't exist. But anyway, no. What I found, I used to trade a lot on the day charts, okay? Like the whole day. Those were probably optimum if you just want to take a trade and leave it. But I navigated to the 1 hour, which I thought would be quite optimum. And then I ended up splitting it down the middle on the 4 hour. And then I found that, like myself, like most people, the 4 hour does seem to be the most optimum time frame to trade on, because you can take a level from a day chart and then you can trade it on the 4 hour chart in a sort of more sniper way. It's not to say that it's better than trading on 15 minutes, 30 minutes, 4 hours, whatever. It depends on your comfort zone, how you feel about it. But I find that the 4 hour is the most optimum time frame for me to trade on. I prefer it. And I spent many years trading on lower time frames as well through my time. And I just found that the best way and the most relaxing way was the 4 hour time frame. I do believe that the guy Shane mentioned here, Dr. Paul, also used to trade on the 4 hour time frame a lot. And but there are guys out there that will only trade on the 5 minute time frame. So it begs the question, which one is better? At the end of the day, I don't think it's relevant to the system, rather more relevant to the person, because this is all about fear and psychology. And as far as I can tell, because the system's not going to make you money, charts are not going to predict the future, charts are not going to make you the money. Win rates don't make you money. It's how you manage it and how well you can manage it, how fast you can manage it, the easiest way to manage it. So it really does depend literally on the person. But just remember, the lower the time frame you go, so if you drop to the hour, drop to the 15 minute, drop to the 5 minute, the lower you go, the more unreliable the information becomes that you're seeing in front of you. So you're looking at information and you're seeing information in front of you and you're thinking, yeah, that looks like a good long trade. That looks great. The lower you go down the time frames, the less information you're getting, because it's on a shorter amount of information. It's a bit like if you go and you you want to launch a product, and you ask 5 people to look at that product for you, and 3 of them come back and tell you it's a good product, and you launch your $1 million company based on that, that's not good. Whereas if you had 1,000 people look at that product, 800 of them came back and said it's a good product, you launch a company based on that, that's kind of more there and thereabouts. And that's the same as trading on a day or a 5-minute chart. Think of the day chart or the 4-hour chart as the 1,000 people, and think of the 5 people looking at your product as the 5-minute chart. That's the kind of information that you're getting. Very little information, much less money, much less traders are involved in that particular position, that particular trading area. So you're going to get a much lesser amount of information back on that trade. Just saying. Okay. Right. You know, you can now, particularly on MetaTrader, I mean, you can pick any hour you want. You can trade 8 hours, you can trade 6 hours, you can trade whatever you like. But nobody trades on the 6 hour or the 8 hour. Everybody trades either on the 4 hour or the day or the hour. Those are the ones we trade on. But I tried the 8 hour, by the way. I did actually try that as well. Long time ago when I was playing around, messing about. Maybe Germany will have a trade agreement with the US. There's something going on between DAX and S&P 500 recently. Because in the past, they most certainly didn't move in the same exact way like they are now. But they look, all the indexes, when they're going up, they all go up, and they're going down, they all go down. But well, not all, but I mean, Japan will be different to, say, Europe. But Europe and America tend to move along the same sort of lines. And but never exactly like the chart. You can't really put one chart over the other and go, ooh, that looks almost the same. Very unusual. But yeah. Shane, I would do another 5-minute challenge like we did before. I love doing it, but a lot of the traders, well, a lot of the guys that are on the show don't really want to do it. But yeah, I'm all for it. We can do it. We can have a bit of fun, and we can do a 5-minute, maybe just a couple of shows or something. If everybody agrees to it, we can do a 5-minute trading thing. Yeah, I can put something together where we trade 5 minutes and do a 5-minute trading thing. I don't mind. That's but the last time I did it, I tried to show you guys how you lose, and I actually won. So it doesn't make much sense. But yeah, that's how trading goes. Yeah, but yeah, 5-minute. We can definitely do a 5-minute challenge again. It would be fun. It is actually quite a lot of fun doing the 5 minutes. The one thing we do have to be a little bit careful of with the show is, you know, on this show I like to teach you guys or show you guys something or go through a process or whatever, which we've done today and we've done on the other shows. So I don't want to sort of alienate anyone or get a whole bunch of people on board because they love watching 5-minute charts, and then the following week I'm back to my normal way and they're all like, oh, that's boring. You know, so I just got to be careful of that as well. But because, you know, this isn't all about me, it's about you guys at the end of the day. But I'll definitely I love doing it. I enjoy doing it. I mean, it's a bit of fun, isn't it? I don't mind doing it at all. Thanks, David. I'm glad that it's helping a lot of guys. That's what I try and do on the shows and try and do on the videos, and try and get across some of the points that are really important and things that have affected me in my career, things that have affected my trading over time. You know, I would sit there and I would look at it and think, this is so, you know, this, that, and the other. And now I get a chance to actually put it out there and give it to you guys so that you can like also understand it the way I do. And it helps. It really does. You know, a lot of older, smarter traders and pro traders go to the higher time frames in the long run. They tend to go down that road because you can position your trade, leave it behind you. And like I say, there's a lot more information in the higher time frames, but getting used to it is difficult. And getting used to being able to leave a trade and let it run. I mean, a lot of people will laugh at me for leaving a trade like this in for as long as I do, but I'm leaving it there because I've got a fundamental belief that that's how it's going to work out. And, nothing goes straight up like on the 5-minute charts. On the 4-hour charts, up, down, up, down, up, down, up, down, up, down, all the way. Never goes quite as simple as you think it would. But this is going to take a while to find its way up there. But there was many times when I told you guys don't trade on the weekends. But sometimes you gotta let it ride and gotta let it go and just hope for the best. And in many cases, and I do that a lot, especially with Brent crude oil, United States dollar. But I try not to hold 2 million trades over the weekend because that could get quite tricky. But if I'm comfortable going into the weekend, then I know that I'll hold a couple of trades. What you got to watch out for is what's happening before the weekend. What's going down? What kind of things are being said? What's in the clouds? What's happening out there? And then you can make an informed decision. These things normally start to go down on a Friday afternoon, big time. They normally start hitting. And what actually happens is what people get caught up in is they believe that, oh dear, there we go again. They believe that it's all going to come right for them, that they believe that everything's going to be just fine. And then they find out that it's not just fine. And they come back on Monday morning and it's all gone. That's the difficulty. The difficulty is they can't believe what they're seeing on the Friday afternoon. They can't believe those big red lines starting to create on the Friday afternoon. So they think, it'll be all right on Monday, be fine. So I'll just hold on. When you see something like that happening and you see there's a lot of hype going on in the background, rather clear out your trades, come back on Monday morning and start again. Because that's normally where it all goes down. Like big bank goes bankrupt, and then all these red lines start occurring all over the place. And you think, it'll settle itself on Monday morning. It doesn't. Come back on Monday morning and there's a margin call on your account. You've got to be very careful of those. But if everything's quiet on the Friday afternoon, everything's peaceful, you can hear the birds tweeting in the background and everything's okay, then normally you'll be okay and you'll get through the weekend in one piece. But yeah, it can be quite nerve-wracking getting through a weekend in one piece if things start to go pear-shaped on the weekend itself, That can be quite a nightmare. But these things never actually happen on a Wednesday or a Thursday. They always happen on a Friday. It's weird. I don't know. Do politicians only work on weekends? Sometimes I'll ask that question. Well, the last few crashes, anyway, that's where it's been. That's what's been happening. In all fairness, on an index, I'd much rather be short going into a weekend than long. So, for example, if I was to take a short on the S&P 500, I'll hold it over the weekend happily. Come back on Monday morning. Worst case scenario is there could be a little bit of euphoria around that has gone up a few points and you hit your stop loss. But if you're short and things do go pear-shaped over the weekend, you're going to come back in the pound seats on Monday morning. That's kind of the way I look at indexes. But if you're long on an index going on to a weekend and something happens over the weekend, you could come back in a little bit of a nightmare on Monday morning. So always do watch out for that. But I don't stand by that policy 100%. Don't trade over the weekend, so don't hold me to it. But I do try and warn people about that. Do be careful when you're going into the weekend on your trades. Well, on the cash leveraged accounts, I'm not worried about the investment accounts because that's 1-to-1 anyway. And also funded accounts don't matter either. If you've got a funded account, you're only going to pay for the funded account. Don't worry too much. That's also not a big deal, because if Monday morning it's gone, it's gone. They're just going to take your account. But on a cash leveraged account, you be very careful on the margin call, because you must remember, if you have $100,000 in a contract account, leveraged account, and you lose $500,000 somehow because of a crash or whatever on Monday morning, they don't just take the $100,000 that was in your account. You owe them another $400,000. That's the margin call. They're going to come and ask you for that. Okay, so just watch out for that. Henny, you have just hit the nail on the head. Henny, your comment, I'm here because no friends with the same interest in trading. Trading is very lonely road and needs some support. Henny, you hit the nail on the head. How many times have I said it? 4 million, 6 million. Trading is a very, very lonely road. It's a very lonely game. I've tried to warn a lot of people about this, that trading is super lonely. You will. The worst is when you at the pub with your friends that you do have, and then they say, "What do you do?" And I'm a trader. They don't think you've got a real job. Number one, there's not much to talk about. Number two, because they don't know. So normally they'll just maybe ask you some advice about their investments, or what to do, or whatever the case. But it's actually, yeah, it's super lonely, and there's no one to talk to. So many years ago, I used to have a WhatsApp group. I wouldn't say many years. How long has WhatsApp been around? But anyway, when it was years ago, it was a long time ago, though. It was definitely more than 10 years. So WhatsApp must have been around for a long time. But yeah, we used to have a little group of 5 friends, and we would sit chatting to each other all day about trading. But unfortunately, I lost contact with a few of those friends, and 1 or 2 of them just stopped trading. So, and recent years, I've kind of been on my own again. And I look at that, and that's another reason why I'm doing the YouTube as well, because it gives me an outlet, gives me something that gives me that outlet, and it connects me with you guys as well, which is really, really great. So, but yeah, Henny, you hit the nail on the head. For those guys who don't know, trading is a lonely game. Even your family members don't know what you're up to. So just keep that in mind. And Shane says, what about Brent short? No ways. I'm long on Brent. And you know why I'm long on Brent? Because I'm long on Brent. I've been long on Brent for the last 4 million years, and I'm still long on Brent. Look, I know everybody wants, or the politics in America want Brent oil to go down, and they want the oil price to go down, and all the rest of it. But in my experience, in my years of watching Brent crude oil, I've always seen Brent crude oil stay between 65 and 120 at any good time. 65 and 100. And on the odd occasion, it bounces up to 120, and on the odd occasion, it bounces down to 0. The only time it goes that low is when there's a complete disaster in the world. When the world is normal, when everything's running as per usual in the world, the oil price will always stay between the 60, 65, and 90, 100, averaging 70 to 80. So the mere fact that it's in the 60s at the moment tells me to stay long on oil. Now, why do I say that? Well, if you look back over history and all the time that I've been trading, I've watched the price, and it always tends to stay in that level. And the reason for that is that people that are managing the oil, the guys that are selling the oil, manipulate the price. They keep the price at those levels, and they decide how many barrels of oil is going out, how many barrels of oil is selling. It's getting too cheap. They hold the barrels back, make it a little bit more scarce, and they make it expensive. and they sit down as a group and they decide this together, which is kind of like monopolizing. And there's nothing you can do about it, and it's always going to do that. So when oil price goes down and it starts looking a bit weak, they're all going to sit together and going to say, the oil price is a bit too low. Let's not sell any oil this month, and it will go back up again. It's just, that's how I look at oil. So for me, I'm only looking for oil, long trades on oil at this price. If the price was at 80, then I'd be more interested in looking at short trades, or if there's any available. But because the price is at 66, I'm looking at long trades. I'm always looking for the long side of the trade on that one. That's just putting a little bit of fundamental into the technical side of the trading. That fundamental is also based on memory of what I've seen before. Mm. Yeah, Shane, that I normally do try and share the contact details. If the members agree that that's fine, then I'll share your contact details with other members that you want to chat to. And yeah, when Shane says OMG Brent, and I'm just doing the opposite to you, Shane. It's fine. Don't worry. Yeah. Okay. So great. If Henny and David want to get together, David, I'll just drop you his email address. If Henny sends me his email address. Okay. Yeah, we'll do that, Shane. But I just need Henny's email address as well. So best he emails me on my email address is on the channel, eh? Okay, great. And then you guys can get in contact with each other and chat and have a bit of fun and whatnot, as we always do. I've done that a few times before, but on request, and as long as everyone's happy with it, I'm good with it. It's no problem. And I know it's not safe to put your information out on these chats and whatnot. It's always a hassle. It's one of the reasons I don't put my main cash account out here on the YouTube, because people get your account number out there and stuff. Oh, it's crazy. I'm so wary of things like that because there's a lot of interesting people out there. So I'm very, very wary of that. It's like putting your bank account number out on the screen. Hey, guy, look at my bank account, and this is how it's run, and this is how it works, and here's the number if you want it. Yeah, do you want the PIN number as well? Here's a card. Yeah, right. That's not happening. So yeah, it is quite a daunting place out there. So I try and keep it careful, and I try and show you guys the best way I can what's good and what's bad. Okay. And I'm glad that you guys are coming together nicely. It's actually quite good. It's what's needed in the long run. And okay, what market just opened now? Let's just see. Oh, yes, it's this one, the Australian dollar. Okay, so that one's going a little bit into the red then. Looks like that one's going to be a monster. Australian dollar, US dollar is going against us. See, Shane, that's the one you told me to wait for. And guess what? I didn't wait for it. So where would my stop loss be? Somewhere down here, you see. So I should have taken the trade from that stop loss. But no, the stop loss is all the way down here. So we'll see how it goes. But if it carries on going and carries on crashing, then Shane's friend was right. And Australia is going down the loop. Look at the S&P 500. Woo, big move there, eh? Wow. Insane. But here we go. There's a level here that it has to get past. Let's see if it gets past that first, shall we? Okay. How that goes. They can have my account number as long as they put funds in. Yeah. Yeah. But yeah, it's like they always say, when they phone you to pay a bill and they want to confirm your identity, like, why? You don't have to confirm my. If somebody wants to pay my bills, they're more than welcome to. I don't mind. Oh no, totally. Go for it, pay the bill. So I wonder why that got so excited. Probably got to do with the US 500. See, it's coming back there now. There's a lot of undecided candles here. I'm gonna make this nice and big. You see a candle with a body in the middle and the two tails on the other side. Very undecided candles. Those candles are undecided candles. So that means there's a lot of indecision on that market, unfortunately. And we'll see how that goes and see if it works out. But it's kind of going against us now. We'll see what happens. Did you go the same way as Shane, or did you go against that? Did you go short on that? We'll have to see what happens. Yeah, it works out. Everyone's always up to donations. Donations are always good. Shane. Shane says he's always up for a donation. Good one. Yeah. Why not, eh? We're traders after all. You have your good days and you have your bad days. Yeah, it's been a lovely day again. Absolutely fantastic. Alrighty then. So I'm going to hit the road again. Be on my way. I think I've given you guys as much information as is in my head today. There used to be a lot more that could fit into my head, but these days a lot less fits in there. Probably because it's not as elasticated as it used to be. Probably a little bit more old and frizzled and whatnot. But yeah, I've given you as much as I can today. So I'll tell you what, I'm going to hit the road, do my thing, and I'm going to see you guys on the next live show, which is on Tuesday at 1100 GMT plus 2. There is a video coming out for you guys tomorrow as well. If you want to watch it, enjoy it. It's a good one. And it's weekend. We can enjoy our weekend and relax. And I do relax on the weekends, by the way, guys. I don't work my butkins off. Definitely not. And I actually take a lot of Wednesday off as well. But enjoy. It's a lonely game, and stick together. Annie, drop me an email when you get a chance with your details, and I'll pass it on to Shane and David, and guys can connect up and what have you. So thanks for watching, guys, and I hope you enjoyed the show. I hope you got something out of it, as usual. Hope it was worth your while, as usual. And keep your feet on the ground, reach for the sky. Until the next one, let me say cheers, ciao.